Welcome to the Real Estate Show on KMED this weekend. Pete Belcastro with you. Thanks for joining us as the month of September rolls along. Hope you had a good Labor Day weekend last weekend, and we move along here, that's for sure. A lot of good things happening. Next week, the home show out at the Expo Park with the Jackson County Home Builders, and we'll be out there and hope you'll join us. Come by and say hello as we look forward to seeing what's new as the fall time has come along. Did you notice, by the way, with Frank Mandia from Tycor Title, get a little bit cooler outside at night. I had almost turned on my heater the other day.
I almost did this morning. I even wore a coat this morning.
Yeah, it is a little change in the air.
Yeah.
Well, thank you for being here. You know, when we talk about lending and in business and so much happening in our valley, and it's always good to hear people who face it every day. And Ken Trotman, who's the CEO of People's Bank, is with us, along with Thomas Knox, who's a small business lender. And first of all, thanks you guys for being here. And Ken, you've been at this a long time, haven't you?
Well, yeah, thanks, Pete, for, again, having us show up
absolutely.
today. Yeah, I think I'm on my 35th year of banking, so tickled to death to have a career that I enjoy and be able to serve it here in the Rogue Valley, which is the best place of all.
Yeah. So tell me the story, because I don't know if people know. I don't even know the story of People's Bank, how it evolved. I mean, you're a going concern. I see you're having I was in Grants Pass the other day, and I see you have a branch coming there as well. So
we do.
You seem to be growing. So tell us a little bit about that story, would you?
You know, just going back, it's if you look back in what was happening in the mid 1990s, that was an era of bank mergers.
Yeah.
I mean, you go through the list. There were probably half a dozen different banks within our area that were impacted by mergers, and people typically in communities like community banks. They like the smaller banks. Or at least like to have the option to be with a smaller bank. Mm-hmm. And so I was with Western Bank, which was bought by
Western Bank.
Chase, I guess. Washington Mutual. It became Chase. I'm sorry. It's been so long ago. And my partner, Mike Sickles, was the CFO for Western Bank. So with that merger, both of us were available. We kind of looked around. We didn't want to leave the community and said, hey, we think we could put a small community bank together that do a good job serving the community.
Yeah,
and that was in 1996.
That was in 1996. Well, I remember I was at SOU in those days at RVTV, and I can remember Premier West Bank, you and Ken Anhorn were kind of the two guys that had these great successes, and then they merged and you guys got to go someplace else kind of thing, didn't you, and start over again?
That's kind of how it goes. But, that was a great opportunity, and we raised money locally from shareholders, put our bank together, started. Thomas joined us, I think, a year and a half after we opened.
And here he is.
6 months.
6 months.
6 months.
Yeah. Man. Yep. So he was early.
And that was like 16 years ago, and you're still with him. So what is it about, Thomas? What is it about People's Bank that you're still there? Because bankers tend to move. People move all the time. So it must be something there that keeps you kind of interested in what they're doing.
Well, the last time I moved was 26 years ago from England. Came out here. Actually worked for Ken when he worked for Western Bank.
Ah, okay.
And in spite of that, I worked for him again and still work for him. The key thing is community, the people that we work with and the people we work for. Great bunch of people in a great setting where you can actually make a difference. You can make loans to businesses and you actually see what's going on, see people getting employed, see people raising their families. Mm-hmm. And where I come from in London, don't see that too much. You don't know your neighbours. To come here in a very small community at the time and to stay in that community, see it grow, see people get successful. Mm-hmm. It's very, very fulfilling.
That's really cool. How did People's Bank, Ken Trotman, how did you survive the Great Recession? Because in our real estate shows, and Frank knows this. I mean, we saw people losing their jobs, businesses closing down. I mean, it was not a very pretty picture. And banks, I know, were going through some really weird times. You guys survived it though. So how did you do that? What was it?
I think two reasons. One is something similar to the show. We would do preparations and presentations at Rotaries and Kiwanis. And during those, we had slide presentations of what was going on in the market. And not only were we doing the presentation, we started actually looking at the information we were presenting. And what you were seeing back then was an increasing cost to homes. I mean, it was a steep curve up. At the same time, you looked at wages and incomes in the Rogue Valley, and it was a flat line. Mm-hmm. And we kept watching that grow and thinking, as a bank, how can that continue? That market can't sustain. And then we went back to our board of directors, who are all local people who lived through the 1980 recession.
And that's a big difference. They're local people on the boards who make the decisions. Okay.
And they were business owners, and they had survived, and they kind of knew what happened. Anything that's too good to be true is too good to be true. You just don't know how to time it. And so we looked at what happened. We looked at our policies and procedures, said we need to slow down a little bit of what we're doing on the construction side, be a little more cautious, look at some diversification of our lending. And we started that in 2005. We were wrong for 2 years. We looked like the biggest fools in the valley.
Okay.
We're giving up some of the best income you could do, which is construction development, with an idea that maybe that wasn't the best thing. It turned out we were right, but we were right further down the road than I thought we would be.
So for 2 years, you're seeing this. Remember, Frank, that we were seeing all this construction, all this development, and people are saying, Ken, you're not, People's Bank, you're not on the wagon with us. And they fell off the wagon, and you were still there.
Yeah, we were.
Wow.
We were. Our sanity was questioned by more than a few of our customers that why we did what we did. Now they look back and say, "Hey guys, we're geniuses." I wish we could say we were. We were worried. We never anticipated a failure the way it happened.
Yeah.
And I have to say too, I was talking to Ken one day. This is as the market was really hot, and Ken was the first person that kind of showed some hesitation about maybe we should be looking at where this market is going right now. And obviously it's turned out that they were spot on as to ultimately what's happened. And you did a good job with the bank.
And look how many banks didn't survive that, huh? I mean, they're gone.
It comes down to, underwriting and policies and procedures and what you want to do and how conservative do you want to be, and are you a long-term player? Our bank was founded by Mike and I with local investors, and my money's in the game. I'm not just an employee of the bank. I've got a significant contribution in there. So you're watching that. You're trying to do the right things for yourself, for your customers, your employees, and all three work together. If you do it right, everybody wins. If you don't, you don't survive, or somebody is a loser on the deal.
Yeah. What do you see today? I mean, we've been on our show, and our listeners know that prices are rising. We're seeing lots of kind of strange things happen a little bit again. And what do you guys see in the market right now? Just the housing. Just take the housing market here in the county. Are you concerned again? We're seeing that. I mean, let's face it. Wages are still stagnant, and how prices are going up. Is that concerning you right now?
Yeah, it's not as far out of line as what it was in the 04-05 periods.
Okay.
It's something to watch, though. The issue we got to deal with today is we've got a secondary market qualification that is probably more burdensome than it needs to be. Very difficult for small business owners or anybody with any kind of blemishes to really get in that secondary market. A lot of the younger people, I think, are having a challenge because they don't have the income to buy into the price range right now that the market holds. We had a meeting at the bank and said, how do we create a product that would have a finished home at about $175,000? And you can't do it. You can't buy land, develop land, and create a lot cheap enough to build a home that would be a 1,200 square foot home in the Rogue Valley and sell that into this market.
I was going to say, and that's not just a local problem. I mean, that's an issue that I read an article not too long ago that even D.H. Horton Homes is looking at. They're trying to figure out how they can come up with a product in the $125,000 to $175,000 range,
Because that is the
people
price,
can
isn't it?
afford
Yeah.
without putting people into a situation where their budgets are so strained that you get a little downturn in the market and one person loses a job. They're living out in the street.
Well, and I agree with you, Frank. I just had some clients, and I told them that very same thing. I said they love this place, and there's only so much money, and I told them I wouldn't do it because you're going to be so overextended that anything happens, you're going to lose it, and you don't want to do that. So it is there. It's still out there, isn't it?
Yeah, I saw an article about on some guidelines about buying real estate today, and one of the suggestions was whatever you qualify for mortgage-wise, subtract 20% from that, and then put 20% down from that price. So you've got some kind of a cushion in there.
Frank, you're scaring everybody off now when you talk like that.
No, so you've got some sort of a cushion because inevitably we're going to go through these corrections. We have for the last 75, 80 years. We go through these corrections in the real estate market.
So Ken Trotman then and Thomas, are you back in the development world again? Are you back doing that again and supporting those things and putting money out to that today?
We're actually looking for developers and builders who have survived and who can see an opportunity within this market. There's not as many as there used to be.
Right, absolutely.
Frankly, we went through about a 3 or 4 year period where there was nothing going on, and a lot of our good builders left. North Dakota. It was a hot area to move to.
Yeah.
Lost a lot of people in that area. We're starting to see some good activity. I wish we were seeing a little more on the entry level, but that's created a market in the rental realm. You're seeing vacancy rates below 2%. You're starting to see apartments and multifamily projects take off. And those have a good place within the market.
Do developers come to you? I mean, I'm curious as to how that works. Or you said you go out and seek some of this too. So it's kind of a two-way street. It seems like.
Well, I've been in the Valley. I was born in Grants Pass, so a big migration, a big trip for me was Grants Pass to Medford. So I know a lot of people, and I know a lot of builders, and you know who are the survivors and the key people that are credible and have great reputations. And so we go out and look for those. A lot of them come to us also just because there's not as many banks right now that do construction lending, and not so many banks in general.
Yeah.
So we're seeing an opportunity on that. Our loan growth is actually pretty phenomenal considering how soft the market has been, especially on the commercial side. And we're averaging close to 20% loan growth, have for the last 3 years. The deposit growth is more like 25%. So we've been a beneficiary of the things that have gone on. We want to see a stronger market. What's happening, I wouldn't get too concerned about because it's trending the way it should trend. Typically what happens after recession is the business community gets hit hard. And commercial real estate really takes a dump.
It took a dump.
Now, we saw it both on the residential side, though, too. A lot of our, and I think what happened statewide, and I know in Southern Oregon, we got hit hard because of our reliance on residential real estate and construction development. So when that went away, we lost, in my mind, 40% of our potential income or driving income that really helps the community.
That's a huge
Now what's
figure.
happening, it's going the other way. We're seeing residential come back slowly, but it's coming back, and commercial follows. And when I talk about commercial, I'm talking about refis. We're doing a lot of refis because rates are great. I'm talking about new businesses, and we're seeing some real good activity downtown. You know, we built a brand new building ourselves 2 years ago on the corner of Highland and Barnett, and it's been a great opportunity for us. But our other clients are looking at that too. So there's a trailing. It's about a 2-year period. Residential, in my mind, really improved 2 years ago. Commercial starting. So we might see some more stable growth across the board. Southern Oregon lacks the rest of the state in the recovery.
Yes.
The experts think that might be attributed that we were probably the fastest growing area also during the boom. And so we had the farthest to fall. And it makes it a little harder to make a comeback. But it's starting to improve. We have a wonderful area. People like to live here. Quality of life, the weather. You know, it's a safe area. If you miss the traffic like once, you're ticked off around here. You're in Portland. You hope you make it in 3 times. All the things that are good. I live 8 miles out of town. It takes me 10 minutes to get to work.
Yeah, perfect. That's why we live here.
That's right.
We choose to do that. Would you rather deal with or loan out on residential or commercial kinds of things, or does that really matter in your mind, or is it a diversity thing for the bank where you're going to have a lot of different things and not all eggs kind of in one basket?
That's a good question. In diversification and no concentrations, I think what we all learned in the financial industry based on the last recession. If you had a majority of your loans in construction development, your bank isn't here today. That we know. And so the key is have construction, have some commercial buildings, have multifamily, have residential, have small business lines of credit, have a lot of the different things. So if one industry itself gets hit hard, which will happen, there'll be another downturn. Everything's not impacted by that one event. So.
Yeah. So you guys now, Thomas, you're involved with business lending, correct?
That's right.
I mean, that's kind of your expertise in that.
Yep.
And business lending, Frank Maney, do you talk to people all the time?
Right.
And business people sometimes are reluctant to they think they get messed up, whatever it was. But how is that going? Do you think that we're going to see, or are we seeing entrepreneurs come back and going to people like Thomas and trying to find out what they're doing? What's your take on that?
I am. Yes, I do see people kind of moving around. What I do here too, and Thomas and I have talked about this at length in the past too. People that have kind of moved up the corporate ladder where their positions have gone away, and they're in situations now where there's a business that I've always wanted to try, and I'm at a point now where probably the corporate world is not for me anymore. So let me go talk to Thomas and see if we can get a loan. There's a business I want to open here, be it a sandwich shop, a gift shop, something at the mall, restaurants, franchises. We're seeing some expansions, some second stores on some new stores and restaurants that have come in the Valley in the last couple of years. So we're moving in that direction a little bit.
Thomas, tell me what you see. I mean, you see people every day. I'm sure you talk to them. What types of things are people asking you about?
Well, to be honest, with virtually everything, you'd be surprised and not so surprised in that we're seeing a real variety. We're seeing entrepreneurs who are 22 years old and other ones who are 62 years old. And all the business ideas they have, they are very different. They can be startups or expansions, or as Ken indicated with our portfolio, it's a diversification of different things within the same business. People running 3 businesses out of one location. It's really across the board. And what we are seeing is a lot of demand. We like to think we're meeting as much of it as we can whenever possible. If it's a startup, we do our best with our lending partners, who tend to be the government agencies, but also local people who help as well. The small business development centres, the So-Readies, people who assist us to make loans when there could be a shortage in what people need to get them up and running, or an expansion. So we're seeing a lot of different things from nearly every sector, from manufacturing all the way through to retail and services.
That's really good to hear. We're going to expand on that here after our break, because we want to hear what I'm curious as to what types of new businesses and how you judge them. People come to you all the time. I got this idea. How does it make sense? Is it going to work? Because so many of them, they fail. We don't want that to happen because you take risk as well. Anyway, the Real Estate Show here on KMED rolls on this weekend. Thanks for being with us. We're going to take a quick break. We're going to come back. We're with Ken Trotman and Thomas Knox from People's Bank and Frank Mania. We're back after. Real Estate Show continues here on KMED this weekend. Pete Belcastro with you. I'm a broker with John L. Scott. We get together, every weekend here on KMED AM FM to talk about issues facing real estate in Jackson and Josephine counties. We love hearing from you as well. You can contact Joe or I by email. It's pete@realestateshowOregon.com. Don't forget, all of our shows are also available on YouTube. You can go to youtube.com/realestateshoworegon. And, you can catch our shows. Tell your friends about that because you're going to want to hear. We're going to take the words today from Ken Trotman, who's the CEO of People's Bank. And we're going to take those words to the bank today, whatever you're telling us, Ken. I think that's a good idea. And we're with Thomas Knox from People's Bank as well, and Frank Mania from Core Title. Next week, we'll be here at the Expo Park with the Jackson County Home Builders Home Show. We're talking business loans and residential loans and banking with these guys. In our discussion about entrepreneurship, and you guys are saying it's alive and well. I'm so glad to hear you say that, and people are so interested in that. I sense that too from just talking to people and clients, that there's a lot of interest in it. But Ken, you brought up something that's really neat, and I didn't realize this. There's a lot of opportunity right now, isn't there, for young entrepreneurs to get themselves going, or even older people who want to retire and have their own business?
Well, especially the younger. 10 years ago, I would go to meetings that the Banking Association put on, and the biggest worry we had is where's the next group of employees coming from? You looked at what they call the pig and the python, which is the baby boomers, which is Frank and I, and we'll throw Thomas in that group.
And me. I'm there too.
that whole group has hung into the job market probably longer than they ever would have. We had a downturn. They lost their investments. Their stock portfolios dropped. Their house equity dropped.
The 401ks. Those kind of things all dropped.
Instead of retiring at 62, which a lot of them do, or 65, they're working till 67, 72. That group now, though, is recovering. Housing markets came back. Their equity's back. Stock market's back to some all-time highs. Mm-hmm. They're tired. They're ready to retire. So if you're 30, 35, there's a business owner down the road, what we do is we match those up. We help finance that bridge. But there's some opportunities in this valley. That's what makes this place unique. A lot of entrepreneurs, smaller businesses, 10 employees or less, takes hands-on management. So I think there's some good things coming up. Not that I'm ready to retire today, but that's looking us right in the eye here. But
yeah, Thomas, how do you judge somebody that comes to you with a plan or an idea? I mean, you better have a plan, or I wouldn't probably come and visit with you. But how do you judge to decide? Yay, we should support this. No, this isn't going to work. Does that fall on you?
It does fall on me, but it falls on my colleagues as well. Uh-huh. We all do the same thing. We go through the same kind of process. We are, Ken probably hate to hear this, but we are risk takers. What we try and do is mitigate that risk as much as possible by careful evaluation of every business plan we get. There's certain components that got to be there. We've got to see some experience. Ideally, we see some history as well in the industry. We're looking for people who, when we do take that jump with them, we're comfortable doing so. Mm-hmm. We know that we feel they can actually do it.
That's probably a big part of it, is that you guys want to feel comfortable with whoever you're loaning this money to, that you're going to get paid back and they're going to be successful, right?
Well, Thomas tells a story, and I'll tell it for him. One of our first customers, came into us, and he's starting a business, and he said, Thomas, I'm ready to jump off the cliff. And Thomas said, the question is whether we jump with you. And that's the way it really is.
Yeah.
Do we can we document and support the request? Because it doesn't work if people can't pay you back.
What about franchises? Because I know that a lot, the SLU School of Business, I mean, they've got classes in franchising, and franchising seems to be, for many people, a unique opportunity. Do you see a lot of that coming through your place of asking for loans or SBA loans on, and I suppose franchises can be, God, anything. Really, I mean, there's tons of stuff out there.
There is. Now there's actually a franchise registry.
There is.
There's
Registry.
There's so many of them. And what we have to do is, whenever we get a request from someone who wants to open a franchise, is go to the registry and make sure it's eligible for us to use one of the government-backed programs to deal with. So they've got to be registered registered through that.
Is it easier to get a government-backed loan with a franchise like that?
I think it is.
Really?
Yes, I think so, because they have a business model. Most franchises, or the registered ones, will actually assist the business owner in saying, yes, this will actually, in this particular location, a lot of them will actually scout the location. They'll check the demographics, those kind of things, because it's in the best interest of the franchise as well to make sure it's going to work. They want that royalty that they get to keep them in business. As far as business owners, a franchise represents still the same things you get in any other business, the same opportunity, but it's slightly less risk. Mm-hmm. In that there is a monitoring, there is a control of product, and a control of the end product, which the consumer is going to get. On the downside of a franchise, if I can mention that, it's not going to make you wealthy in one store. Generally, you want 4 or 5 before you get the same level of income as just a regular business could be getting for you. Having said that, there are some very, very successful franchise owners that we have a number of in our bank.
They just have one, right?
Some of them have one. Some of them have 6 or 7. You get 6 or 7, then you can be a very wealthy individual.
And what types of franchising is out there? I mean, is it everything available to somebody? I always think of franchises being fast food, but those are kind of expensive, and you don't really get those. But there's a lot of other things, I would think.
There are. Those are the ones I think people come across on a day-to-day basis. There are other ones, but say those are the ones that will catch your eye as you drive down the high street, certainly. For us, again, there's a recognition. I know when I'm driving in a different town, then I'm going to see a food franchise, for example. I'm pretty sure I'm not going to get poisoned if I eat there because of the franchise controls that you have.
I'm like the opposite of that. I go to the mom and pop place out and avoid the franchises, but just because to support local business. It's crazy, isn't it? How we think and how we've made ourselves too.
But what I'd say, Pete, is those franchises, they are local business, and they are employing our local people. You take let's just take an average coffee stand, which may be a franchise. Say it is a franchise. It's going to employ between 8 and 10 local people. Generally, the people who really, between the ages of 18 and 25, that maybe couldn't get a job without them. So even though they're a franchise, they still are employing local people, and they're, for the most part, locally owned. So I think the idea that this is a big corporation, I don't think that's a correct.
How much cash does a potential entrepreneur have to bring to the table to satisfy the two of you in your bank? I mean, do you have to have a ton of cash? Because, Frank, it's hard to get when you're young. Ken, we're talking 25, 30-year-olds, have great ideas, but not much money. How much do they have to have?
They used to say equity, you got it 4 ways. You can marry it, steal it. You can't borrow equity. That's the downside. You got to get it somewhere. A lot of times you earn it. Could be family.
Yeah.
One of the things Thomas does a lot of is the small business lending. And I know a question we get is it hard to get? And why do we use it instead of a conventional?
We're asking a question. Yeah, that's a good question.
I thought you were going to answer your own question.
No,
I'm sure how clever you were. So, equity is always the issue. Always
the issue.
Always the issue. It's been one. Collateral. Collateral is very much a secondary source of repayment. Everybody thinks you've got to have stuff to get a loan. Well, collateral is a secondary source of repayment.
Okay.
The primary source is the ongoing operation of the business. That's really what we're looking at initially. Equity. There are ways that we have used in the past to allow people to get into businesses if we feel particularly strongly about them.
So the business itself has to be a pretty good, you think it's going to be a good risk to do?
Very much so. Very much so. So we're not in the business of doing, gentlemen we both used to work for, said rule number 1 of banking is don't do dumb deals. And exactly that, we don't do, it's going to need...
dumb deals.
It's going to need to be something we can really back and get behind and say, well, why did you do that? Well, at the time we felt, and then list the good reasons for it. Otherwise, it's not going to go through me. If it goes through me, it's not going to go through my supervisor, not going to go through loan committee that Ken's on, because he's going to throw it out and say, what are you thinking? And you don't want Ken yelling at you saying, what are you thinking?
No, you don't want that happening.
Not a good place for anybody to be. But say equity, coming in with the cash is the tough part.
It's the toughest part. And I think there's no question about that. And in your business, when you're running your business, having cash and cash flow is always the big problem, isn't it? So I think,
cash flow
what is an average? I mean, average may not be the right thing, but how much should you have? What is it? Is there a figure that you would kind of toss out there?
I'd toss out to anybody 25%.
25%.
25%. So if you're looking for 100,000 to start a business up, we're going to do 75. You're going to do 25.
You're going to do 25. So 25% is that kind of that figure that makes sense. And Ken shakes his head, so it must work there for you, obviously, at People's Bank.
There are other programs that Tom can use government back that help you get it smaller, but
Yeah.
they're unique and designed to certain industries.
Well, it's really good, though, to hear that people are out there using them. And I think because, boy, being your own boss is still the best thing in the world. I think no matter what anybody ever is going to say to me. Anyway, the Real Estate Show rolls on here on KMED. We got one more segment to go. We're talking with Ken Trotman and Thomas Knox from People's Bank and Frank Tycor from Tycor. We're back after this. The Real Estate Show continues here on KMED this weekend. Pete Belcastro with you. Joe will be back next week. And, of course, next weekend we'll be out at the Expo Park for the Jackson County Home Builders Fall Home Show. It'll be Friday, Saturday, and Sunday, and hope you'll spend $3 and come out. $3 all weekend you can get in each day for that. That's $1 a day. That's a pretty good. It's like a dollar store. It's a pretty good deal there. Frank, you going to be out there?
I'll be out there Sunday and probably a little bit on Saturday.
Because
too.
you're on like the Home Builders Board, isn't that? Aren't you on that?
I'm the associate vice president for on the board for them, and
So
of course, I do their
you-
golf tournament. I've done that for 20 years now.
You and Brad, you guys kind of like hang out together.
I know.
I like that.
I know.
Anyway, we're today talking about banking and loans and business loans with Ken Trotman, who's the CEO of People's Bank, and Thomas Knox, who's a small business loan officer there as well. And it's great to have you both here. Community banks are, at one time it seemed like they were going to be a dying thing. But, I'm so glad that you're here. Seriously, I mean, I say that I'm not a big fan of big banks. I never have been. And I like local banks, and I just wish we had more of them probably, but maybe you don't. But anyway, I'm glad you survived it.
Well, competition's always good, and we're in one of those cycles. If you go back and look at every recession, you have a decrease in the number of banks after a recession.
Yeah.
And then you get into an economic recovery, and you start to see small banks come again.
And banks are like airlines, they just names come and go, and then they just disappear, Western Bank, my father was Western Bank back in the 70s, wasn't it? And all these kind of good things. Anyway, Frank, you got some stats you wanted to share with us about just the market condition of what's going on there. So tell me what you got there.
Yeah, Pete, we're doing better this year, and we've seen it this spring here locally. I mean, we had a fairly good market, and we're beginning to see confidence come back on both the buyer and seller side on residential, and we're also seeing the confidence come back on the commercial side. But kind of over this last 8 years, we're still not back to where we were to what we call the peak period 8 years ago. The median price, from numbers I've seen, we're not going to see the median price come back till about 2018 from where we were even 8 years ago.
That may be a good thing, though. That's
a good thing.
In 2005.
Yeah. New construction, we're like at 72% below the peak of where we were 8 years ago. But I mean, we've still got population increases in demand for new housing. Yeah. So we're going to have some issues in terms of prices and how that's all going to work, and depending on how we can satisfy the demand. And my question to Thomas is, as we've gone through this correction here and these changes over the last 8 years, and we're talking about franchises, how are those groups worked with people that do own franchises and all their royalty obligations?
I think, Frank, it's varied, but I've seen very cooperative where people are franchisors have actually cut back on royalties. Obviously, royalty represents to them their income. They've cut that back to allow a franchisee to survive. To the other extreme, where there is no, that was a deal you signed up for. That's the payment you're going to make. And obviously, with most royalties, they're going right off the top. So if your sales go down, the royalty goes down, but your fixed costs stay where they are. So It's been a mixed bag. It's been a mixed bag.
And I guess same overall with just like lending in general. I mean, some of the big banks, when we first started seeing all the foreclosures, there was no give and take. You didn't make your payment, we took the house back. I mean, and you had to get out. I mean, but inventories just got to the point where now what are we going to do with all this inventory? So I think we're still kind of struggling with some of that. But on the commercial side, Ken, as far as businesses that were kind of struggling a little bit, how did you guys work with some of the local people on some of these issues?
It's an interesting dialogue on how it works. If your bank is in strong shape, you can work with your borrowers. Meaning, if you have enough capital, you have enough earnings, you've got enough of a reputation with your regulator to do the right thing with your clients. Right. When we deal with FDIC, we deal with the state of the Oregon, and during the height of the we'll call it the depression, because that's really what it was. Their advice to us was try and work it out, make a reasonable workout level with each client. We were looking really at two things: the ability of the borrower to pay us, and willingness to pay. Right. Ability is can we document? Can we show that they're making payments other than we just wish they paid? Do they have tax returns that show it? That's the ability to pay. Willingness means have they paid you? If you have a client that's always paid you, and we've all heard the horror stories of the person who's never missed a payment with their bank, and then they got the notice that, hey, we're calling your loan.
Right.
And that comes down to that we couldn't document that they paid, and the regulator's beating on the bank, and the bank's already in trouble, and now they're trying to figure out how to get rid of that loan so they can improve their financial status. We didn't have that. We were a strong bank through the whole period as we started out with a lot of capital. We had a few losses that went through that period, but we had customers who wanted to pay us. And because of that, we worked with them. In some cases, we have one 7 years later. We're still working with them. And it's getting better. And it's going to be a workout situation that makes sense for him and us. It's probably the best thing we did. But regulators were in a year ago, and they said, do you still have this guy with you? And I said, yeah, he's doing what he said he would do. And we're doing what we said we would do. And we were able to do that. I'm pretty proud of our lenders, Thomas and the whole group down there. That was their number one prerogative, is how do we get these clients to get through this worst period? Our clients, the downturn started, the thing that they didn't want to do was cut staff or lay off people. They work hard. That was their lifeblood, and some businesses were too slow to make that adjustment. Now they're working leaner, they're smarter, they're doing better, they're working harder than they've ever worked, and they're getting to that point where they're ready to hire again. And that's a good news story for the Valley and really for the state and the nation. So, and we felt like we were part of that process to get them to that level, and so we're pretty proud of our group for that.
See, so being a community bank, you could work with them, whereas a big bank, you may not have that same flexibility, even though you may want to as the individual.
Yeah, we want to, but I see those people at the grocery store.
Yeah.
And it's pretty hard to look somebody in the eye who's trying to pay and say, I'm sorry, I can't deal with you. And we didn't do that. So.
Yeah. Well, that's good to hear. We're almost going to be out of time. Let me get everybody kind of a final comment out of this thing. But Thomas, people who are interested in small business loans or business loans, first of all, I know you're kind of like the expert in it, so people need to get a hold of you. Is that the first thing that they should do?
Yes, it is. Give me a call, depending where you are. What I can do, if you're not ready to see me yet, is I refer you to, say, some of our lending partners, the small business development centers who can assist with a business plan. Once I get that business plan, then please come in and see me.
Because I will tell you one thing. If someone is really determined and really wants to do this, they can. You can succeed, can't you? I mean, you can have different scenarios, but you can succeed.
We have any number of success stories. Say we're a small bank, but we have a number of success stories we're very proud of.
That's really cool. And Ken Trotman, I mean, that's really cool. The bank is doing well, and the only community bank around. So you got to survive and do well. We want you to. Well,
we want the community to be proud of us, and we want them to support us. They can be shareholders. We are a stock ownership bank. So if you're happy with what we're doing, buy some stock. That's how you keep community banks around. So
and you're loaning money in residential and commercial and refinances. So all that is clicking along, and that's helping the economy, obviously. So good luck to you as well.
Thank you,
Frank. Well, we're out of time, bud.
I know.
It goes by
We'll be back
fast.
Again.
We'll update it again in a few weeks, and we'll see what's happening as the fall rolls along. That'll do it for the Real Estate Show this weekend here on KMED. Don't forget, this show repeats at 9 o'clock on Sunday morning, and all of our shows are available at youtube.com/Real Estate Show Oregon. Next week from the Expo Park for the Home Builders Home Show. Have a great week. God bless everybody.
Thank you for listening to the Original Real Estate Show with Pete Belcastro and Joe Brett, the real estate guys. For advice, guidance, or counsel on any of our topics, or to watch a replay of today's show, visit our website at realestateshoworegon.com. This show is sponsored by RE/MAX, Ideal Brokers of Southern Oregon, Ticor Title, All Cities Property Management, and the Jackson Soil and Water Conservation District. We'll continue our weekly quest to enhance the value of your property and to make you a smart real estate consumer when we gather every Saturday and Sunday on KMED for the one and only Original Real Estate Show.